Hello and welcome to Business Today Television. I'm Siddharth Zarabi, and joining us after the close of what's been a manic Monday on the markets, deep red all across the Indian markets following what has been a global rout across exchanges, across markets and territories, is the chairman of the State Bank of India, Mr. Dinesh Kumar Khara. Welcome, Mr. Khara. Before I get into the quarterly performance analysis, I just wonder if you would like to share your thoughts on the current situation that we saw in the markets. Is this indicative of some deeper problems as far as the US economy or broader metrics are concerned, or just a one-off in your view, sir?
I would say that it appears to be a one-off event, and perhaps the kind of uncertainties which are unraveling, the kind of events which are taking place, perhaps it's a reaction to that. But I think once the market rationalizes all these events, the situation should not look as bad as we have seen today.
Absolutely. Mr. Khara, let's turn the attention to the latest set of numbers, solid set of numbers as always, but just a marginal increase in net profit. What explains that? Is it the higher loan provisions that have led to this marginal increase, or is some other factor at play, sir?
No, actually, we are in fact, first quarter is always a bit subdued quarter, and we have seen it also in the past. Though we have grown almost 4.90% over quarter one of the financial year 24. We have also seen situation where, since our loan book has grown very well, we were required to make some provisions for the standard assets. So that is something, that is the other reason which is there. And some bit of slippages were seen, but those are all temporary aberrations. Almost about 7,900 crore slippages were seen. So out of that, about 1,700 crore we have already pulled back. And so this is something which explains. So what I would like to say is that the fundamentals stay intact. There are some the first quarter related phenomena, which is essentially invariably this quarter does not have the advantage of accumulated recovery throughout the year. So that is something which is there. And otherwise, when we look at our operations in general, we have seen the net interest income has grown almost about 6% on a YY basis. And even our asset quality also has improved, because our gross NPA number has come down from 2.76 to 2.21. At the same time, our cost to income ratio is much better. It is less than 50 now. It is at 49.42. So some of the core factors which eventually show up in the overall profitability of the bank, that stays intact or it has improved. That is something which I would like to highlight. So I think absolute number, which has grown only by 0.90%, I would still rate it to be a pretty good number.
What do these factors imply for the rest of the financial year? And I remember a target that you had, the SBI had set once of 1 lakh crore profit for the current financial year. Are we on track for that kind of performance?
I would say that the kind of visibility which is there for the loan book growth and the kind of underwriting which you are doing, this should be actually eventually turn out to be a reality. And if you really look at it, even in the last year also, we had actually made a profit of almost about 84,000 crore. So from that number, reaching 1 trillion should not be as much of a challenge, because we are seeing the loan book growth happening at a decent pace, almost about 50% plus growth, which you have seen, and it is very broad-based growth which is there. And also this broad-based growth also offers us opportunity of improvements also. So I think overall, because of these factors, I believe that 1 trillion net profit should not be should not be there in the distant future.
Mr. Khara, one of the other features is that credit growth at around 15.4% is robust across all segments. Break it down for our viewers. What has this really translated into?
Yeah, see, what has happened is that our yield on advances has improved because of our very clear focus in terms of the composition of the portfolio. And also, we were having our yield on investments also have improved. But what we have done is that we have actually reoriented our book towards more towards the mid corporate and the large corporates also, but not at the cost of our retail growth. Retail growth has been continuing. It is actually at about 16% CAGR for last 3 years. So I think this is something which has helped us in terms of uh, having this kind of improvement in the net interest income. But yes, of course, when it comes to deposit interest rates, we have seen some kind of increase. But I would say that to a greater extent, it is already factored into in our deposits, which have been repriced already.
What is your sense about the deposits and also the cost of funds scenario? Because we are already seeing that as far as deposits are concerned, banks are raising rates. So, how is that scenario likely to pan out, Mr. Khara?
Well, as far as State Bank of India is concerned, we are very mindful when it comes to the cost of deposit, and we are ensuring that we should not be raising deposit at a cost which is unusually high, and that is one of the reasons why we have actually seen our cost of deposit going up by about 45 basis point in all. And but yes, of course, we are ensuring that there should be a reasonable growth in CASA. We are having a very clear focus for savings and deposits. But yes, of course, this is something we have to operate in the given overall economic environment and the macro situation. So a lot is being talked about CASA, but I would only like to highlight that before COVID, CASA actually used to be around 40% in the system as a whole. And we are uh, during the period of COVID, during the peak of COVID, it was at 45%. Now again, it is trending back to 40%, and we are somewhere around 41. So I think we are very mindful of this ground level situation, and with that in mind, we have started building up our sharper focus for improving our savings number, and as well as for improving our current account from the trade commerce industry, etc., etc. I would also like to highlight that as far as savings bank accounts are concerned, we are opening almost about 60,000 accounts daily. And out of this, we have also actually seen that our savings bank deposits have grown at a much faster pace as compared to our competitors. So this is the kind of focus which we have on liability. But yes, of course, while saying so, we are very mindful of our depositors' interest also, and that is the reason why in the term deposit in different buckets we have increased the deposit rates, which of course we had done somewhere in the month of December 22, January 23. So much of that interest rate increase has also been factored into, because significant portion of our term deposit is actually into the 1 to 2 year bracket. So
Right.
all that has been already repriced. So I think I expect that going forward, we should not have much of a challenge relating to the deposit interest rates or the increase in deposit interest rates which we have done.
Mr. Khara, what is the direction of interest rates likely to be from here forward?
I think in the next policy, I don't expect any change, but maybe towards the busy season, maybe there could be some reduction, but much of it will actually depend upon how the inflation trajectory will look like. Um, as of now, we are expecting that maybe in the third quarter, we might get to see some reduction. But yes, of course, it is merely an estimation based upon the likely evolution of the inflationary scenario.
I want to talk about the overall NPA picture. The gross NPA ratio is down almost 55 basis points, and so is net NPA. What is the potential for further reductions, Mr. Khara, in the balance period of the financial year?
No, actually, for this, we will draw the attention to the fact that when it comes to our different subsegments of the loan book, retail is much less than 1% as far as gross NPA is concerned. Um, SME is somewhere around 3.5, 3.25. So it has actually come down significantly. And in fact, corporate would be somewhere around 2% or so. And we have got a very healthy PCR with OCA, it is about 94%. So I think what my expectation is that there is a essential scope available in our agriculture book. There also we have reduced our gross NPA from somewhere around 14% to about 9%. And we would make an effort to address this gross NPA in agriculture segment. First quarter is of course not a representative quarter for the agriculture sector, but I expect that from the second quarter onwards, our effort would be to bring down this agriculture NPA, also gross NPA from 9 to somewhere in the range of 8. So that is the effort. But I think overall, our effort is that fresh underwriting should be of the best possible quality, so that we should avoid any incidents of NPA, and also there should be effective monitoring on ground, which also will help us in ensuring the quality of the book. I would say that the kind of practices which we have put in place, it has certainly strengthened our capability of ensuring the quality of the loan book.
Mr. Khara, which segments, especially in the corporate book, are likely to perform well in the forthcoming quarters?
No, I expect that the core sector, because essentially when it comes to the focus on the infrastructure and the government spending, which will be there for infrastructure, that will certainly give a fillip to the core sector of the economy. And apart from that, the new focus for the renewable energy, which means solar, semiconductor, and all such allied areas, battery storage. So these are the sectors which I expect that they will do extremely well going forward.
Mr. Khara, before I let you go, I also want you to talk about the comment that you have also made earlier, and this is to do with savings and the flight to the markets. Do you see any recent decisions taken in the budget and subsequently likely to influence the direction of how savers are utilizing their surplus money?
Well, when it comes to savers, they have got multiple options available for the asset allocation, and invariably they do the risk reward relationship check. So, the kind of market behavior which has happened today, some of the fence sitters, as in the stock market, may prefer to look at the bank deposits, though it would be a temporary phenomena. But nevertheless, I would say that some people were looking at the future and options as an opportunity for significant return generation. But yes, of course, there's a little technical subject. Unless and until people know about this subject, it is advisable not to venture for it. However, as a regulator, SEBI has also taken some steps to ensure that only those who understand the subject should come into it. So, which very clearly means that those who are not fully conversant with this subject, they would rather keep their savings into the bank deposits. To that extent, it would be positive. Though, when it comes to the short term and the long term capital, there is, I think, I mean, the market looks to be better, but then again, as I mentioned, that the risk reward relationship has to be kept in mind, and the principle of allocation is invariably followed by savers to ensure that their portfolio stays balanced. And to that extent, there is an opportunity for the banks to garner deposits, and even the flow of money to the market instruments will also be happening through the
Right.
banking system. So even that kind of a flow will also eventually
Right.
move through the banking system.
Mr. Khara, your tenure from October 2020 onwards has seen remarkable profit growth. And this is, I must tell our viewers, your final results, quarterly results press interaction that you are doing, although I'm hoping that in some new avatar we'll get to see you talk and comment. But you said that when you had assumed office, your annual profit was 40,000 crore. Now on a quarter alone, you are doing 17,000 crore. How has the journey been, sir?
When I assumed the office, our annual profit was 14,000 crore, 14,000 crore, and now our quarterly profit is 17,000 crore. It has been quite a satisfying journey, and I'm very happy that a significant portion of this profit was plowed back into the system only. So in last about three and a half years time, we have plowed back about 1.14 trillion, which has actually helped us in supporting the balance sheet growth. And I'm very happy that it has also helped in generating much better ROA and ROE for our stakeholders. So happy to create value for the stakeholders, happy to create value for the customers. It has been quite a satisfying inning.
Absolutely, and we wish you all the very best for all the future innings, Mr. Khara, from every member of the Business Today family. All the very best for all your future endeavors. It's always been a pleasure talking to you here and elsewhere. Viewers, that is Mr. Dinesh Kumar Khara, the chairman of State Bank of India, taking us through what is now his final quarterly earnings report. We'll be back with more. Until then, goodbye.
There's one industry which is secure.